to the Decentralized Daily podcast, where you get your daily dose of cryptocurrency news and information. The crypto news that matters to you. Nothing on this program should be confused with investment advice, because we don't give you any. It's not that kind of show, guys. Just the facts here, just the facts. So sit back, relax, gather your thoughts, and prepare yourself for today's market movers in cryptocurrency.
All right, guys. It's February 23rd, 2018, and this is your Decentralized Daily. Let's get into some market movers. Today in the market, looks like Bitcoin holding strong at 10,556. That's up 6% from yesterday. Ethereum sitting at 875.51 is up 3%. Ripple, the centralized cryptocurrency, passed the dollar at $1.01, up 7% from yesterday. Lots of green in the market today, guys. Might be just coming back from the recent downturn earlier in the week. Number 4 spot goes to Bitcoin Cash. Old B Cash still sitting in there at $1,299.59. It's up 8% on the day. Litecoin. I think this still might have something to do with the LightPay announcement. It's at $217.13. That's up 11%. So, what's going on in crypto news today? An article out of CNBC says 5 reasons 2018 could be the best yet for cryptocurrencies. This author writes, Bitcoin is the most important cryptocurrency. Most government-backed money that goes in and out of the crypto goes through Bitcoin. So what happens to the original cryptocurrency affects the entire market. The token's market dominance stood at about 40% as of Wednesday, but by estimates, however, it's clear Bitcoin's market dominance should return to about 75% of the entire space. This author actually sees 150% potential upside in Bitcoin for 2018. Why does this author think that? Well, Bitcoin is still dominant. It has the biggest user base and the biggest industry. Still, it faces a challenge in scaling up for a wider use. Bitcoin now can't handle more than 6 or 7 transactions a second. Compare that with credit cards, which involve thousands of transactions per second, so the criticism about Bitcoin's ability to be useful on a larger scale is understandable. The scalability challenge results in higher fees as well. So what's the solution? It's a so-called second layer peer-to-peer off-chain network. We've talked about this in previous episodes. To cite an example, the Lightning Network created by Blockstream allows for transactions off the blockchain, thereby decreasing the transaction costs almost to zero and increasing the speed and scalability almost infinitely. And it's just getting started. In the coming months, we'll see a sharp uptick in transactions and the use of more Bitcoins in these channels. What's more, the Lightning Network doesn't have any fees. In other words, second layer networks solve the problem Bitcoin faces, scalability and lack of liquidity. That could be a key reason why Bitcoin surges this year. Another reason this author thinks Bitcoin will be successful in 2018. Large scale and more legitimate ICOs. Like last year, initial coin offerings will impact the Ethereum network because ICOs usually require plenty of Ether. That will buttress the demand for the platform's digital coin. More legitimate ICOs will lead to greater interest in Ether, as we have already seen with the billion-dollar ICO of messaging app provider Telegram. That was a big one. That means we could see a rise in the market cap of Ethereum to $200 billion by the end of the year, from less than $90 billion currently. The cryptocurrency price could possibly double to $2,000. Though other platforms could see similar gains, this author believes Ethereum would be the main focus. I'm going to have to disagree with this author on this one. There are a lot of coins out there trying to do what Ethereum's doing. They're trying to solve a lot of problems with Ethereum. So it's all kind of a race to see who can be the best smart contract platform out there. My humble opinion, I believe it's Neo, but Cardano has a good use case as well. We'll see what happens, guys. Another reason this author thinks that Bitcoin will be successful in 2018, regulation. Many believe regulations hurts the market, but that is short-sighted perspective. In the long run, companies require rules for the sake of legal stability and certainty. Regulation gives users and institutional clients the confidence to invest. We saw something similar when Japan started regulating Bitcoin. The market dropped initially, but it rose eventually. Ditto in Australia. Other companies could follow the same rulebook. I think we're going to see something like that with South Korea and probably many others. But the market's fate will be no different than after what played out with Japan and Australia. Reason number 4, a lot of execution and usability. There are several startups that offer debit cards to help people spend their cryptocurrency. 10x, as well as many others. That means the number of users and merchants is set to increase sharply in 2018. This will burnish the reputation of cryptocurrencies with more and more companies trusting them. The firms that execute well this year will stand out and create survivorship bias, where a few companies thrive and others fail, but people focus on winners and ignore the losers. Most startups bomb, obviously, but the spectacular successes of companies such as Facebook and Airbnb help mask those failures. Likewise, the success stories of a few entities in the cryptocurrency space will overshadow the negative news of several cryptocurrencies going bankrupt. Reason number 5, institutional developers. And I think this is a big one, guys. Last reason why 2018 will be a stellar year for cryptocurrencies is that this will be the first year of solid institutional money flowing into the ecosystem. It is estimated that close to $10 to $12 billion has so far flown into the crypto ecosystem, but that's nothing compared to what institutional funds could invest. Since those first funds propped up the market to around $500 billion, the next $10 to $12 billion, which is peanuts for some funds, could double the market cap this year. And I think institutional investing is going to explode the market. Once the whales really get in, we're going to see the price blow up, guys. Another article out today from CoinDesk. The Bank of China moves to patent blockchain scaling solutions. Well, how are they going to do that? This author writes, Bank of China, one of the 4 largest state-owned commercial banks in the country, has filed a patent application for a process it says is better able to scale blockchain systems. According to a document released on February 23rd by China's State Intellectual Property Office, the application was first submitted on September 28 last year and invented by Zhao Shaoxing. The application details that instead of letting a new block store transactions from a previous one, a data compressing system could be used to pack transactions from multiple blocks into what the patent calls a, quote, data block. For instance, as the patent application describes, once the system receives a request to compress transactions from block 1 to 1,000, it causes a new block to be formed and temporarily hosted on a different storage system. The system will then run the packed data through a hash function with a hash value. Further, the compression system will give labels to identify blocks on the blockchain, newly formed data blocks, and the compression event. The corresponding relationship among the 3 labels is also recorded on the blockchain. Using this method, the patent claims a reduction in the amount of data stored in the new blocks as transactions mount in the blockchain, while ensuring that data from all previous transactions will still be tamper-proof and traceable. While the patent is currently in the review process and is yet to be granted, it comes as a part of wider effort by the country's state-owned commercial bank in advancing its businesses through using distributed ledger technology. So, what's interesting about this, China, even though they're banning cryptocurrencies left and right, does look like they're allowing distributed ledger technology, blockchain technology, to be integrated into businesses. It's no surprise to anybody that banks would want to get in on this business. Blockchain technology could help them out tremendously. So I don't blame Bank of China for trying to implement something like this. Now, it is interesting to see if this would be successful. Lightning Network is one idea to make Bitcoin faster and cheaper. This is another one. So we'll see how it plays out in the future. And that just about does it, guys, for today's crypto news and market moves. Make sure to check us out on Twitter at DTalk Podcast. You can find us on Facebook as well, and on YouTube at the Decentralized Talk Podcast. Make sure to listen to us on iHeartRadio, iTunes, Google Play, and Spreaker. Stay up to date on your crypto news. Be sure to check out our weekly podcast, the Decentralized Talk Podcast. We have a special guest this week, but I'm not going to ruin it for you guys. You'll just have to tune in. As always, have a great day and stay chained to the block.